Good morning, traders. It's 8:02 a.m. Chicago time on Wednesday, the 23rd of August, 2023. This is episode number 2522. Thanks for joining me today. Quick reminder that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, popping right over as we follow our routine, but I'm going to spend as little time as possible on this morning. The conversion trading pre-market summary sheet, I want to get down to the technicals as quickly as possible. Overall, we're looking at mixed sentiment, but we did have a pretty good run-up overnight, led by techs again. NVIDIA really pushing to the upside, and then all of it kind of turned and came back, a lot of it to almost break even on the European Open. European PMIs came out pretty weak. And so overall, the market's not getting off the bottom that it put in yesterday, and that's really what's important to take away. European PMIs, French, German, EU manufacturing higher than expected, services lower, UK manufacturing services lower. JP Morgan expects ECB to pause rates in September and postpones final 25 basis point hike forecast to October. We're looking at today, we're looking at the S&P, the continued reporting PMIs, except this is for the US S&P Global. Flash PMIs for August at 9:45, expecting 49.3. They'll report manufacturing services and composites of 49.3, 52.2, and 52 respectively. At 10, we get new home sales. We're looking at negative 1.6 forecast month on month, and sales, we're looking at 705,000 units expected. Then we get crude oil inventory at 10:30 Eastern, expecting a draw of 2.85 million barrels. And in gasoline inventories, we're looking for a draw of 888,000 barrels. And then after that, we get the Korean interest rate decision. And then Jackson Hole is in play now. And so we're going to be looking forward to a whole bunch of comments, news, blurbs, whatever, throughout the day now as a result of Jackson Hole. We do have Fed's Powell on Friday at 1:05 a.m. and we get ECB's Lagarde on Friday afternoon at 3 p.m. So that's something to look forward to. The S&P this morning is in a multi-distribution profile. Just active price discovery again, which is good for us because we want that active price discovery as the market runs through and tries to figure out value, creates opportunities through price changes for us, and that's something gives us opportunities, more and more opportunities to gain from the market if possible. The inventory, however, is 100% long. We ended up settling at the point of control yesterday at the low end of the range. Just a pretty dull day yesterday, in my opinion. But the inventory is 100% long, and we have about 26 points of range, which is pretty decent given that the mode is 28 over the last 252 days. So pretty good stuff here. Looking at the overall picture, so let's start with the bigger picture. Actually, let's start with the bigger picture. Yesterday, what was expected was this. Here's what was expected. This is from yesterday's Trader Bite. The expectation is we would open up in the 30 area. We would pull back, so that's pretty normal given the conditions, given that we're in the middle of a turn up. We generally don't turn in a V-bottom. That doesn't happen unless there's some significant news. So it's a turn up. So we expect the market to be responsive and pull back. We expected it back at the prior settlement, and I talked about 44. I think it might be in the captions here. Let's see. There it is, 44.0875, and then potentially 4,400 test. before it starts to climb out. And as soon as it cuts to the other side of the open, then it's longs all the way through 36, 56, 58, and 65. That's what yesterday's plan was. Pretty confident in that plan yesterday, that that's how things are likely to play out. But the market had different ideas, and it was unable to do this. So as we look at the profile here, we see that the open remained at the high. The initial balance took up about half the range, so we've doubled the IB range here. And all we've done is form a B-shaped sort of profile. And what we had is long liquidation. It was a squeeze yesterday. We ended up pushing down into the 94 area, 94 and a quarter. We still held inside of and the most significant parts of the prior session, Monday's session, and we're holding one-time framing up still. So the trend is looking like it is doing the job of shifting. And then in the overnight session, we pushed from settlement to 25 and a quarter and back down at a low of 43.99, 50, which is right there at settlement. So you have settlement and the prior day's low, or the overnight low, in the same spot. The point of control, the overnight point of control, as I mentioned, is 44.07, which is exactly where we are. So we are inside of yesterday's range. We are inside of yesterday's value. Price discovery profile yesterday, and the volume doesn't look like that in the market profile. And this is where market profile kind of fails us a little bit, because time is not so much a factor as volume is. And you could see the left profile is the volume is just it's just very, very active there. So I don't believe that there's value here, but we're opening against the overnight point of control in yesterday's range in the bulk of where we ended up in the afternoon, and we're just not getting off the lows. So it's very important that we hold the low today from yesterday at 94 and a quarter. As soon as that's breached, it's very likely to run through and start to move towards this 43.80 area. And then from there, it's basically discovering what we had left behind from last Friday. But really, the expectation is this thing is pulling back, taking in the energy needed to start pushing towards the 65, 90, 93 to resume. And the techs are doing a better job of doing that than the rest of the sectors. The rest of the sectors are a drag. Yesterday's techs actually took back pretty much everything they did the day before. The techs led up on Monday, and they led down yesterday. So we have NVIDIA after the close at about 4:20 Eastern or so, and that's likely to shake things up. But it seems like a lot of that's priced in. So we'll see. Here's how the action was. Yesterday, I found to be, despite the fact that it is a price discovery type of profile, or just kind of I found that the action itself was not easily legible. We had a pretty strong delta throughout the session, but selling throughout the session. So you can see the delta, this blue shaded area, pretty strong up, while price from the open just stayed below. So there's some divergence between the aggressor and how price movement is. It tells us that as the market's pushing lower, the offers being lifted. However, very large lots, that is 100 lots or higher, were doing the selling yesterday, and they were being carried by the large lots, which are 10 lots to 99 lots executing. Remember, this is MBO data that is rebuilt, reconsolidated. So we're seeing the actual trade coming through, and then based on that, we're building that delta profile. And it's rare that we have small lots and large lots working against very large lots. I find that to be interesting. These look like hedges to me based on the type of price action that we're seeing. But overall, we did sell off. We had a multi-distribution profile. We had the point of control at the low end of the range. We have a weak low from yesterday at 94 and a quarter or so, 95, 94 and a quarter. It screwed that up. 94 and a quarter, and we have this big box right down here that we are stuck in. So we, everything from about 94, 95, all the way up to 44.12 is this kind of box that we were stuck in yesterday, and that's exactly where we are today. So we are sitting here on top of the point of control underneath the VWAP mid. Notice how the VWAP in mid yesterday just shut the door multiple times throughout the session. They were just not able to get bid. So yesterday, immediately we see don't get long, right? So as soon as we see that, we know don't get long. So there's one third of the possibilities taken off the table. So that gives us the ability to focus on the other 2/3, which is sell or sit sideways. And it's just a question of identifying areas to sell against with clearly defined risk. And then we stick our neck out, we define risk, we put on our size, whatever size is appropriate for our account size and the size of our stop. And then we look for targets that are reasonable, and it provided all those, assuming that you're going to be focused and willing to sit through some pretty slow rotations and a crap ton of selling. I mean, there was so much selling yesterday. Sweeping of the book yesterday. I'm not going to be able to pull it back here, but we had, we see this at 7:30 here this morning, but we had a lot of these big dots yesterday throughout the action, and we saw that it was just every time buyers would pull up, there would be another 1,000 lot, 1,400 lot kind of hitting the bid and splashing the book down a little bit. So it kind of put us back on our heels, and I found it very tough to hold shorts because it would rotate up pretty strong, and then out of nowhere you would get the market kind of selling off and moving down. So the initial trade that I had set up that I talked about in Maven's channel on Convergent Trading was the short, but then it came all the way back and it was just tough to hold. Saw the same thing the day before, and overall just not as clean a trade as I would like to see. But then again, it's August. We're not supposed to get a clean trade this time of year. So this is where we are. Yesterday, we ended up pushing up into this low volume zone on the composite here and then selling off. We were not able to retest and take back this 35 area up here, and we've come right back into range, and we are back below the 44.12 and above the 43.80. So I'm expecting a lot of balance today. I just don't see us moving away from here, and there's not much. We covered what's on the calendar. There's not much of a catalyst. If you look at the overnight session, look at what it did here. It opened, it immediately ran. I'm sure a lot of you saw what was happening with NVIDIA overnight. I'll show you that. NVIDIA crossing the $1 trillion market cap. So you could see that NVIDIA just opened up high, had a huge gap up, and then sold off throughout yesterday. And it's kind of helping lift all of the microchips, and it's doing it on the back of the AI craze right now. We can see that we reopened again. A lot of buzz about NVIDIA overnight. A lot of different news items, and then we peak out right after the European Open, and then the PMIs come out, and boom, it comes right back into our box from the prior session, and here we find ourselves. So today, it's going to be very important to have strong rotations out of this area. Unless we see strong rotations out of this area, there's no edge to trading in here except if you're looking to scalp or trade, oscillations or whatever, using some sort of regression strategy, which, I trade. I trade value, right? I trade value. I trade through price action. I put trades on based on order flow, or I locate trades based on order flow. That's the entire process that I follow. But the market's got to be very, very clear to me on what it wants to do. Otherwise, I'm just gambling, I believe. I can always scalp. I can always fall back on scalping if I feel like I need to. I can see things that I can participate in, for example, collisions that hold, um, uh, short traps, long traps on the footprint, things like this. But structure, I want to focus on talking about structure because I don't want anybody here to scalp. There's really not a long-term future in scalping, in my opinion, because you're competing with a lot of machines, and you're competing with some really, really, really sharp traders with really fast connections and fast systems and a lot of data. And it's just, I feel like you can't build a career on that long term. It's good short term. So I don't want to talk about scalping, but structure itself, it's got to decide today if it wants to take out the 94 and a quarter, ending the one-time framing up in ES, and that could give us an opportunity for a quick push to 80 and 70, and then retesting last Friday's low. Otherwise, if it just opens and it's kind of gyrating back and forth and back and forth, then I'm not really interested. I mean, it'll look more like yesterday's crude oil. Look at yesterday's crude oil. Pretty brutal day yesterday. Look at that crude oil trade right here. This was yesterday's crude oil trade. I mean, wow, that is some ugly action here. Complete balance. It opens, pushes up, goes to mid, doesn't really take the IB, comes to the other side, goes to the other side, blah, blah, blah. And it finally has its range extension and gets its IB stat really almost really after the really at the in the last bracket of the day, the last half hour trading, it takes out its IB stat. And we the guy who works for Angelo works for EdgeClear, and he's our content producer. He's just a very knowledgeable trader. And we were communicating yesterday. He's like, well, I'm doing a video on the crude, which I think has been published on the crude release today. Nothing has happened today. And so I left him a message saying that's exactly the time we want to do these, because when the market moves around like it has been in crude, and then you have a day like this, then what happens? Remember from Dalton's book, I'm going to try to draw it. From Dalton's book, what is this, people? What does this look like to you? Right? When a tall lamp has a small base, it falls over quickly. When a tall lamp has a big base, a big footing, it's harder for it to tip. So when you have these wide IB ranges or a wide-ranging day, the continuation of that's why we always look for a trend day. We can see that it's likely to continue because trend days tell us that there's price discovery that is incomplete. So it's likely to continue in that direction the next session until it finds its sellers if it's higher, finds its buyers if it's lower. But it's not going, it's very unlikely that we have a huge trend day followed by a huge trend day, especially in futures, right? And so what you have is a day that is very compressed. And so this forms a very small base. Look at that profile. It's very, very tight, very balanced. What does that lead to? Imbalance. And there's your imbalance. Boom. That's what happened overnight. So now we end up with a gap down in crude, and it's a gap and go situation. This is an open, what's called an open test drive, OTD open. This is a type of situation where you don't want to get long today in crude. This may be, and my point to bringing you here is to say, this may be the kind of day we see in the ES today. Unless something feeds the ES some news, it is really having a hard time figuring out what to price in next. So this morning, I'm expecting it to kind of slosh around. I don't know what it's likely to do. The odds are, because we're stuck in that yesterday's box, the odds are relatively equal that we break higher out of the box or break below the box. I just don't see the odds tipping one way or another. And if we find ourselves in this yesterday's crude-like balance, then you just need to sit and wait for it to break, maybe break the IB and go into imbalance. And then now we have an IB pullback short, if it's to the downside, or an IB pullback long. But my point being, until something dramatic happens today, I'm not willing to participate early on. It's tested down, it found its lows, it gapped up, it's found its sellers yesterday, and it's back in the middle. Why am I sticking my neck out when there's no edge there? So that brings me to, on days like today, brings me to the NQ. The NQ did pull back just like the ES did, but it pulled back relatively high, and it's actually above Monday's range. And the NQ still has a lot of work to do right up here at the 15,100. The NQ has a better opportunity to form a base today, pull back, form a base, and push higher than the ES does. The ES is much more murky, and it's down here on a relative basis. It's more down here, and it's more in a very balanced kind of heavy area. Remember, 44.19, 44.20 is the MC point of control in the S&P, and we're currently trading 44.10. So the NQ may yield a little bit more opportunity. So those of you who are convergent in the Mavis channel, I'm likely to post about the NQ today as I anticipate balance in the S&P. I'm not asking you to switch products. I'm just warning you that this is not the kind of day you want to make a huge commitment in terms of your account on any one trade. Okay, I don't have much more to say than that. I'll leave you with that. Here's what crude looks like. Let's move this back so it doesn't include today's action. 12, yep. Okay. And so and you could see that crude has been imbalanced. We talked about this box in crude, and now we have imbalance in crude, and now we're on our way to discovering. Today, what we have to do is go back to the last template day. So we're looking at late July and this trend day. So you want to look at this trend day profile right here and pay attention to, are there single prints? What are areas that it found resistance or support, and so on. So crude looks like it is free to float. Looks like the low in crude is 77.90. So here, crude is 2 ticks above this low, very likely to take this out, and work its way through. Crude is on its way down to 77, it looks like to me. So we'll see how that goes. Anyway, I'll leave you with that. Good luck. I'm happy to take your comments. Let me know how I can offer better information or make things more clear. So I'm always looking for feedback. Hopefully you're gaining something and you're coming in with a plan in mind and more confidence in your trading. Good luck, and I'll catch you tomorrow morning. Take care.